Hey, this is Sasha, and welcome to another episode on Hungry for Returns, where I answer your trading and investing questions based on my own personal successes and failures. Now, if you have a specific question that you want me to answer, then head on over to our website at tradersfly.com and you can submit one by voice and you can listen to yourself on one of these episodes. Or, of course, you could write one in. And sometimes I'll go ahead and screen capture some of the comments as well. So feel free to write a detailed comment within YouTube, and we can go ahead and include that as well in one of the questions in the future. Now, in today's Q&A session, what I want to do is talk a little bit about swing trading. So Kevin asks, I'd like to ask you, what's your time frame for swing trading? 6 to 8 weeks? I'm currently having an identity crisis in terms of my trading style. I realized if I transition from a swing trader to a position trader, I would make more gains at the expense of being able to execute less trades. Okay, so the definitions are firm, right? There are definitions for a specific set, such as, hey, you have rules, there's a stop sign, you got to stop at the stop sign. It means fully stop, not slow down, look both ways and keep going. So the same thing here. If you look at it really as a definition, yeah, 6 to 8 weeks is typical. So I'd say 6 to 8 weeks is kind of a typical definition. But the reality is when we really look at something, it also depends on market conditions and volatility. The whole point behind swing trading is letting a run as far as possible in that trend or in that moment, in that wave. So that's really the whole goal or point. So if you look at it on a weekly chart, let's say for Apple, and here we had a little bit of a pullback. So if you were to look at swing trading this, well, let's say you got into this stock somewhere around here, 2017. Well, that swing trade could be, a 2-year hold if you're kind of a little bit on the longer time frame. If you're looking at things on a weekly basis, if you're looking at things maybe more on a daily or kind of 2-day basis, a swing trade could be that right here. And this is what I'll say most people do is, let's say, hey, you have that breakout in August, and you let that run kind of continue till about September. And that's when things stall out, because if you're running for 4 weeks, 6 weeks, kind of to the upside with minimal pullbacks, eventually, the reason they say 6 to 8 weeks is because eventually you'll get a few of those red days or where things start to pull back a bit. And that's why they kind of have that in that definition. Now, it can be longer depending on if you're taking profits into strength. So let's say, hey, you get into a stock a little bit earlier and things go up and you take half of your position off somewhere after a couple months and you have a little pullback and then you add to it. Well, you just ride and keep working that swing trade because you have that initial position that was very good. So it's not ideal answer for you. Maybe it's not as specific of what is a swing trade, but look at it as a portfolio whole, as a lump sum. If you have $10,000, $2,000 you might use for speculative trades. $2,000 might be in cash reserves. $2,000 might be in long-term investments. $2,000 could be in swing trading. So again, and some of those swing trades could be, if we take out the swing trading definitions, just look at it hold time. Some of them, some of them are going to be as long as possible. Other trades, your total portfolio might be a little bit shorter. Some will be even shorter. You have a few trades that might be very short in time frame, and some trades probably somewhere in between there. So, have a mixture of hold times, and that also means position sizing, and that'll help mix things up. But you don't have to be any single one trader, because then you're really confining yourself into the box. If you say, hey, this is the only way to do it and this is the type of trader that I am, then you've totally eliminated everything else. It's kind of like what I always say when it comes to learning about anything. Only believe 50% of the things that I say, and then the other 50% learn on your own and gather other insight, because that way you're open to new things. That way you're open to embracing other ideas and concepts. Because if you're just 100% all in swing trading, 100% all in day trader, 100% all in day trader, penny stock with options, all of a sudden you've really specified yourself, made it so specific that you have no room to diversify your income. And even though specificity is important when it comes to choosing a business, choosing a niche, targeting a customer, when it comes to investment, diversification is the right approach because you're looking at sustaining your capital. And, you know, with anytime you get a pullback, you're looking to preserve that capital. So anyways, I hope that makes a little bit more sense, gives you some ideas and perspectives on swing trading, trying to figure out your identity. You don't have to be one individual on the markets. You could just, you could pick one thing and do it time and time again. But remember, as far as your cash goes, allocate it into a few different spots. All right, so thank you so much for joining me. Don't forget to subscribe on YouTube, or of course, join the newsletter list, or click the link, or visit our website at tradersfly.com. So that way you can get notified as we release new products, books, great specials, and some really detailed video courses as well, some as long as 20 hours long. So thank you so much for joining me. And in the end, remember, do what you love, contribute to other people, but most importantly, live life abundantly. See you next time.